Right, folks, we're starting the recording. It's Sunday, early April. I cannot believe nobody made an April Fool's joke. Anyway, here we are. I do have a long list, 125 tickers. I'm pretty sure there were 3 or 4 that came in last minute. I was not able to incorporate, but we will do it at the tail end of here. I also have questions that I saw, so we'll address those at the end. Okay, that's fair enough. Anyway, so hopefully this week will be a little bit less stressful on everybody. All right, let's address it. AbbVie is the first one, and whenever a stock looks like this, I hope that the person is asking to see if they can exit and not get long. I would never say, yes, you can invest in a stock up here. In fact, it is vulnerable to come down below 130, just from a technical perspective. Don't short it because of that. There's no internal sign of weakness. So if you're actively trading it, like minute to minute, do your own thing with that. 161.5, 161.6 is doable based on this chart. Somewhere between these two is the middle, and that's exactly where it was. You can use this as a reference. So that's AbbVie. ABC, to tell you the truth, I don't remember much about it, except that I would not chase a stock looking like this. I would have to zoom out and see if this is all-time how it is. So same answer as AbbVie. You have to study the company to see if it's an investment prospect or just trade the actual action. So next time it dips towards 147.50 or 145, it's worth a shot on the long side from a trading perspective. Airbnb, I'm going to zoom in a little bit. All right, pretty choppy, vulnerable to 165, maybe even 161. When I say vulnerable, it means it's not an obvious breakout from here. It does have the opportunity. I don't want you to okay, so let me redefine vulnerable. That technically it should drop, but that doesn't mean it will. And if it does, it's an opportunity to get long. So I have a couple of lines of support listed, and I just listed the upside opportunity. In fact, this would be a better chart to share in the table, and I will do that as we speak. Yes, there is a table. Yes, it will be out with the video as an attachment, so you can address it. Maybe I'll put it in the video as well. Adobe, pretty choppy action. It has a neckline that it can break out from, that turquoise line, cyan line. It could get to 500 from there. It does have support below. What it doesn't have is the love of Wall Street, so be careful with that. Pretty wide range. I would say we could do an iron condor, but I know that it's not that liquid for me. At least it's not for me. Affirm, finally, what? Are we actually finally ascending? So let me talk about that. For months, it has been selling rips mode. You can see that those the yellow lines, it's been death. And finally, it went sideways a little bit. And maybe, just maybe, they're starting to create another one that's going up. So let's zoom in on that. You can see it. Now they're starting, well, at least they bought one dip, and this is the second dip that looks exactly like this one. And if they want to repeat it on the way up, remember we said the red path, and then we said, okay, we can identify the little yellow bowl and the late yellow path, and look at what it did. So what's the plan? Try to rinse and repeat. So if we can do the same one, if by extension we can do the same one, I will even copy paste, and let's see how that works out. So if we did this, and we'll make it a different color. How about white? White works. Okay, so what that means is if they can come back to here somehow, maybe they'll do another one of these. Let's look left. Well, ooh, there's a big gap here. So there's a lot of things to worry about on the left, but what I want to know is that they actually are buying dips now. So is it? I'm not announcing that it's it. I still think it's a good company, and it's making progress on the chart. Nice to see. Okay, AMC. I know there's a question about it, about selling covered calls. So I would not own AMC, but if I did own it and I don't mind selling my shares, then I would definitely do covered calls. In my opinion, and it's a humble opinion, I think their business is dead. They're going to have to find a niche way of doing things. It's not an opinion. It's a fact on the chart. So when a company goes from doing 5 billion to 2 billion, And from almost profit to not profit to minus $1 billion. They're bleeding. That's what I'm saying. They're losing $600 million from their operations, so they have to borrow to exist. So if this year they don't turn it around and interest rates are rising, if you have a variable mortgage, you're going to have a nasty surprise on your statement next time you adjust. It's going to go up a lot. Hopefully you have a lock. So at least the first step. So that's going to hurt companies who need to borrow. Like Tesla got out of it. They don't need to borrow anymore. They create their own destiny. So these guys are not there. So be careful with that. Yes, covered calls only if and only if you sell a call that doesn't create a loss. I've heard people say, I'm in trouble with my covered call. That means you probably sold it too late, or you're not the right person to sell covered calls. Because the covered call, if you actually are trying to save the call that you sold against your asset, it means you're choosing to book a loss so you don't book a profit, which is insanity in my book. But some people do it. A lot of people do it. Too many people do it, which are not the people that should sell covered calls. Okay, enough about this one. It did surprise me with how fast it rose. Let's see what it does with 26. I thought it was toast under 21, but guess what? GME saved their ass with their split. Are they going to split? Shrink to grow? Anyway, what a debacle in Wall Street these days. I mean, what is happening? AMD, you've seen my videos about it. I mean, I've spoken enough about it. The fact that if you haven't seen, if you don't understand what's going on with the chart, then I failed in my videos, or you didn't see my videos. Anyway, I would sell a credit put spread confidently. I would sell a credit call spread on rallies. It has a range. I think it has a lot of support at 100, because if it loses 100, it's going to the 70s, if not lower, eventually. But it's not doing that alone. So if the market's correct, it could go below 80 quickly. So I'm okay with that risk. I'm also okay with resistance into 118. So iron condors could work. Credit put spreads work better for me, personal taste, rather than shorting. I would rather get long on dips, and this is the dip to get long on. Amazon, I would rather to range bound it. So if you ask me, thanks, Rez. If you ask me, I'm not hearing them, so maybe my settings are low. If you force me to trade Amazon right now, I would do a 3-week long iron condor. If you don't know what those are, they're basically range bound trades that say, hey, this stock is going to ping pong between this and that. And then you sell risk below, risk above, and you just wait for time to die. All right, so in this case, we do have support in this range. It's a wide range, but that's the point. It has solid support at 3,200 and a solid opportunity to break out, which means solid resistance at 34. I think they'll ping pong between the two, because either of those two break, they carry distance in that direction. And I don't think we're ready to get to 3,600. But if we do break into the high, we will get to 3,600. But conversely, if we lose 32, we will get down to 3,000. So I don't think we're ready to either of those two, so we might meander in between the two. We'll see. We'll see what happens with the headlines this week on the macro basis. A lot. I'm not a headline guy, you know me, but there's so much serious stuff that could break. Like, okay, most headlines don't matter, but guess what? If giant countries do giant things, those headlines may matter if they affect business. APD, Air Products. Whoops. That headline does not matter. Somebody mentioned, hey Mimi, that they just unionized. That headline does not matter. Yeah. Other union companies still work just fine. Amazon makes enough money to feed everybody, and they're not shy about spending money on their people at all. I recently, because of the union, I got a delivery package while I was waiting outside. I was standing with my son on my driveway. The Amazon person shows up. 10 seconds earlier, I get a text. Your Amazon delivery guy is right there. Give them 15 feet of distance or whatever. They mentioned number of feet. And it's like, I've never seen that before, but fine. It felt like an insult. First of all, also they can appease their own people. So now I feel like animosity towards this person that came up to my door just because he's telling me to step away from them. You know, they didn't actually, but that's how it translated. But hey, union, yes. So the union expenses are not going to matter. They either do it in legal fees or they do it in fees for the union. That's personal preference there. I mean, opinion. So 255 on this one is important. If you look left, that was a major place they should have held and they lost, and now they're coming back into it. So a dip to come up at it with better wind, they might get to here. So I'm telling you, it's struggling here, which is normal. 255 to 260. And by the way, if there's a gap up there, it's not a reason to buy. It's a reason to buy if it's going up already. Gaps don't change the direction. They just may be magnets if you're going towards them. RK, almost like a firm. Finally, maybe not. Are they developing some sort of a positive trend after being shellacked for months and months and months and months? Did they bottom and now they're trying to rise? So keep an eye on it. Look, a dip, bought, dip, almost like a firm. So if you're long PayPal, Affirm, this one, IWM, they're going to look about the same. Shorter term, we have a tight range between, say, 69 and 66 or 65, 66. A breach of either of those sides might carry a little bit momentum in that direction. So if it does fall to 62 or 3 or 4, it's an opportunity to get long with a stop. So the disappointment is if it loses these, then we're back into here. It's like, what? Why? And look, there is resistance from older, and look at how it failed right in the box. I didn't know this when I drew this box back there, right? See that? All right, which means that when they get here, if they get here and they take that out, we're on to something. You're welcome. No, Brad, he was not. Okay, so this is not US market, but I've held, let's see. I remember drawing the boxes inside the box. I'm trying to get a little bigger picture on things while I get my thoughts here. Okay, so looking at the daily chart will give us an idea at the risk below. You cannot lose this, because if you do, then you jeopardize losing this, and if you do, you're going to here. That's what I'm showing. And a lot of resistance above. So be mindful of this. It's a wide range, so I don't know how you're trading it. FMG, that's also overseas markets in Australia. It's going into prior fail in a big way, though. Look, weird. It's like they're allergic to this area. Watch. Gaps, gaps, gaps everywhere. So it's a pretty messy area. So be careful. But if they take this out for whatever reason, then they challenge up here. And it looks like buy the dip opportunity. So this one I don't trade anymore, because it feels like it's tightly controlled and the market maker can just screw with me all they want. So I just don't do it. And they're vulnerable, and they're coming down to 1940, and that would be normal. If it comes down to 1880, that would be even better as a buy the dip opportunity. And if you last time apparently I drew this, and look at how it came down almost to the perfect goal, and then they bounced, and for the same reason they failed, almost to a penny where they failed before. So what you don't want is come back and lose this, because if you come back and lose this one, it's going down to here technically. Now I am amazed, I've mentioned it before, at how they do business, because their stores are awful coming from a person whose son is actually a professional in the business. Like, he needs auto parts all the time. He tells me, I cannot believe they're still in business, and I trust him. So a 20-year-old instinct on this, in this matter, I think I just don't know how they do so well on the P&L. So maybe at the expense of the client. I don't think that lasts very long. So be careful buying it at all-time highs. Now take these out, and then you have another leg higher. Is this an all-time high? I cannot remember. Yes, it is. It's amazing. Okay. Also, if we indeed are going to be crimped for cash from inflation, we're not going to be spending much on anything. So that would be the inflation that actually needs to be fought, not the inflation that everybody's willing to pay anything for everything. So keep that in mind. Buying the dips into 1920 and 1860 makes sense. and 1760. Just be aware of the mega drop if it happens. I don't trade it for options. Baba, everybody's contacting me saying, is it safe? Is it safe? No, it's not any safer than it was before. The company itself, business is awesome. That wasn't the problem. The problem was that they were selling every rip, whatever that reason. And look, rally, sold, rally, sold, rally. I don't know if it's going to be sold. That's been going on for months. Unlike Affirm, it doesn't even have an ascending trend. What it did is a crash and a recovery. That's all it did. And it's done that before. This was a blind buy, and I cannot believe I didn't get longer. I shared the long, and it played out. Up here, I'm not as confident. But if I were to do it, I would bet on the downside not happening again, meaning I would sell a credit put spread or sold puts. So breakout from the prior fail, which is 125, can bring you 150. I said it should be 180 to 225 this year, somewhere along the lines. When, I don't know, and the if is still iffy as to whether the government is done beating up on itself. The Chinese stocks had an incredibly bullish headline last week, but I think it was bunk because I would have expected a bigger response. Something along the lines that the Chinese government is not open to allowing auditors to go in and check out their companies, which would reduce the risk of delisting, but it didn't take flight. I'm not sure why. Okay, BBBY. Be careful. A store I haven't visited in eons is just, I don't know what to say. They cause the habit with their clients to not go in unless they have a 20% coupon. That's what I think was at the heart of the problem. I've seen other businesses do it, especially restaurants, and then they get stuck. So in this case, you do have a Head and Shoulders brewing, and if it does play out, it's somewhere around here. Where does it trigger? This is start 1, start 2. So 20.8, but it has support at 21.8. I think if you lose with this one, we'll bring about 20.8 test, and if that fails, it'll go to 18. A lot of resistance is above. Booking, another one I don't trade because it's manipulated, kind of like AZO, and I used to trade both of them a lot under Priceline. I have never traded. Have I traded Booking ever since it's went to Booking from Priceline? No. I thought that a company that decides to build a brand, an amazing brand like Priceline, and then for no reason change it to Booking. I mean, I'm pretty sure they had a good reason, but it sounds awfully stupid. Same with Facebook and Google. Anyway, all right, so let's do this. If you can take that out, you can do whatever you want. That's basically it. Meanwhile, you do have a whole bunch of resistance up there, and you can buy the dip. So I had a buy the dip opportunity here and here. I don't remember doing that, but check out. It bounced right in the middle of both. So both were correct, and I would extend those forward. I think Booking just changed names from Priceline. Nobody bought Priceline. Priceline itself changed its corporation. There was no buyout. Anyway, look it up and let me know. BLK, that's BlackRock. Those are the guys that actually drive the market. Companies like that, they do that. So I have no reason to chase it. It's going up, yes, bounced well, into a cluster of resistance between here and here. So I don't know what to do with that. This was a neckline that they lost, and it's going to be lingering. Let me see if we can get some information from the weekly chart. Okay, so they better not lose the 680. I know that it can go down to 660, but if they lose the 680, I think they come down below 600. They shouldn't do that all by themselves. Clearly, they're a good company, and they're not hurting for business or anything. It's just price action. I don't know what this is. BRCC. Is this the one somebody said, you just want my opinion? Okay, so I would imagine that this is going to be difficult to break. but it is a catalyst if you take it out. Going into an all-time high, it's not a good idea for me to ever chase. Maybe if it drops down to 19, or even better, 18. Berkshire, I'm going to say it and not insult anybody. It's vulnerable to 331. It is vulnerable to 330 or 331. This is a possibility. You're thinking to yourself, what could get it there? Plenty of things. Possibility. Technical thing. Not clearly. Somebody said, do I need to hedge against what? Or anyway, you don't even need to do homework on the company. The company is as solid as it gets. I mean, this is like the definition of the perfect investment company, because that's what they do. They invest without any shadow of doubt in great businesses. They've made very few mistakes, but they have made mistakes. My biggest worry is one guy is 98 and one guy is 92, 93, and they are the face of the company. So it is, that's my only fear from a headline perspective. This is not Steve Jobs and Elon. Maybe it's closer to Elon and Tesla, but this is a pretty scary thing. I know he has a team. They have a team behind them. But, hey, I'm still leery about Bezos leaving. So technically, it is vulnerable, and the things could start at 346, whatever it is. So let's say you bounce over here, and then you're going to have resistance, and you come to here, and you find yourself tripping up. Boom, you get to here. That's step one. You'll bounce here and do something else and come down. So I would wait for a dip. A great company, no doubt. So if you invest in for the long term, and you say it won't matter a couple of dollars up or down, so why not wait? If it truly doesn't matter, why this logic only is applied up and not down? That's the logic. Okay, Bitcoin. So it made progress. My scenario is still not gone. What scenario is that? If I go to a daily chart, you'll see it. Months ago, I did a video and I said if it loses support somewhere around the middle 40s, it's going to come down, bounce off of 36, and maybe come down and go down to 28 and maybe 20 eventually in several steps. So it bounced off of 33 like I said it would, and I did buy coins, not Bitcoin, but coins. And I held them, and I'm still in them and very profitable. 40%, depends on the coin. And they just finally broke back above 46, but they came back below it. So the battle around 46 still lingers. The bulls need to be convincingly above 46. How? If they take out last week's highs, they can get to the 50s, and then we put that behind us and we start looking on a trending up. It will eventually become the 33 that will bring 28 and 20. That will happen. I can almost guarantee it. It's just, is it in this wave or not? So I will double my entries. I may book now if that happens and then re-engage lower later. I want to accumulate coins for the long term, so I will keep a core position. I'm doing that by staking coins and staking stable coins and getting 10% so I combat inflation. And every penny I make from those, I buy coins with. That's how I'm working that. That's not very cool, Brad. Bud is the American, non-American beer. So middle of the range, nothing to do. Literally high, low, somewhere in the middle. So what are you needing to do? Trade it, invest in it. I guess over the long term, it's pretty low, but I don't know if the business is flat. So why should the stock go up? It's not for me. Maybe if there's enough premium, I can create income by selling. If I wanted to own shares in the company this stable, what I would do, I would sell puts every week until I get assigned shares. And if I don't get assigned shares, I made money from the shares without ever even owning them. But that's a big if. If. So why is Citigroup so much down on its luck as a stock? Do they have exposure overseas that we don't know about other things? I would be scared catching this falling knife, A, because of the rally. Weird setup here. B, what is this? I mean, this is a bank. It's not supposed to trade like it's Bitcoin. So something's going on. I would rather use a different bank. But if it comes back down to the 47.5 and lower, I might be interested for a trade. So I don't think it is easy to get long it here. Okay, and the P&L is not good. See how the sales are coming down? So maybe it is good for somebody that knows it inside and out, but the stock price is telling you something. This one played out are arrows. I had 2 arrows. If somebody stayed in it, I don't remember what this is. Crown Castle, okay. It still has potential up there because it was sloppy on the way down. So it's no reason to short it. In fact, about this much is the target. So you can stay in it as a trade if you're fast enough, because these break sometimes. And if they do come down, you can get long hoping that the ascending trend will happen and then they take this out. So if I'm long, I stay long. If I'm looking to get long, getting long here, it means you're actively trading it pretty fast. So the slower trader should wait for a dip and then finish the job. Probably something like that. I will update this chart and go to CCI. Okay. CCJ, I would rather get long on dips. It is vulnerable. It is in control. It is in the hands of the bulls, so don't short it. Look at this nice double top, which means I'm not saying the double top is anything. It's an opportunity to break out. It's a line in the sand that they're trying to work off of. So buy the breakout or buy the dip to get to the breakout. Chewy. Somebody said, if they didn't take the credit put spread that I mentioned last week, is it okay to do it now but lower? Yes. I think the way I structured it is still statistically viable. We'll see what happens. And it is in a support zone. It's not a hard floor. I did disclose it extremely well when I did the video. So I have lower highs, so the bears are still in charge, and then the bulls are making some higher lows. It is coming to a head here. We have these guys versus these guys. There's going to be a face-off this week. Either they go whoop or bounce this way. Hopefully, if the market is positive this week, that'll give some advantage, because you don't want this. And I think my risk was at 37, 38, somewhere down here. Versus the opportunity to come up here, do this, and continue the ascending trend. This ascending trend continues. That's what's the hope. All right, let's put that in there too. Chewy. All right, Clover. CLVR, that's not Clover, right? No. Some tickers, I forget what they're all about. Crap. That is an ugly chart. Okay, so that's not for me to say anything about, except that hopefully you're actively trading it. You got a problem at 3.25, 3.3, you take that out, maybe you go here. You have support, but it's ginger and it's very sharp. So you lose 2.34, this low, you may count down to 1.8, 1.9. CLVS, another micro cap. Probably the same person. Same exact comment, except 2.7 will get you the all-time high, or this high, whatever that is. You have a lot of support levels. So the bulls are in charge. They could fade to 230, 235, buyable dip. Costco, there may be a change in Costco, I don't know, but it's not like the spending. Like if indeed we're going to crimp spending, because that's what the Fed wants to do. I mean, Costco, where people spend the most. Incredible company, incredible stock. Buy it on the dips. I'm not going to condone chasing it up here, not even with a credit put spread. The only credit put spread I do is a year, like out 6 months or something, down in the 500s, low 500s. There's no need to trade it right now. I don't want to short it either. Why short the strongest stock? So this is pretty exciting, CRM. However, I bet you I had a deja vu in with this one before. It has now a clear breakout line, so clear that it just says, oh, duh, it's going to 248 or more, this red one. Look, fail, fail, fail. It's too clean. Coming up to it from below. So that's the line. So if they meander up to here, expect this burst with a lot of resistance somewhere in the middle here. But is it too easy? So how do I do that? I do a credit put spread. So I don't have to chase. And then I can add a debit call spread on the breakout. I put a note to myself, maybe I'll write it up this week. Cisco, somebody wanted to do covered calls, I think, in Cisco. You can. As an investment, I mean, it's one of those companies I don't understand too well. Let me see the growth. Clearly, it's a financial beast, like it's been here forever. But look, 49 to 51, they are improving the net, so they're getting more efficient at what they do. It's not dirt cheap, 20 PE, but it's definitely not expensive, so there's nothing against it. Clearly, they know what they're doing. Let's see on a weekly basis. Covered calls, if you own it, you want to keep it, covered calls work. Thanks, Rez. Look left. That was a major catastrophe area back in 2019. They recovered, and now they're using it as support. So you cannot afford to lose 52, in my opinion. May come down below 50. So if I own it, I would want to hedge it that way by selling covered calls if there's enough premium. I'm not sure there is. Chicken soup. Yeah. So you see down here, you see the sales, the revenue line, the blue line, and the net income is growing in the loss. That's not the right stock for me in this environment. This is not for me. It's going into a prior fail. Maybe it takes it out and get to 1350, but be careful with that. CVI. Oh goodness, energy company. All right. This is not an obvious entry point from a weekly perspective. So inside the week, it might have good days, but you're going into an area that was very pivotal back in 2020. So be careful. Between here and 30 and 32, there is going to be a wall somewhere. So buy the dip, I guess, below 22. Carvana, I need to do more homework. We are missing a piece of this puzzle. It looks like Zoom on paper. Huge rally out of the pandemic, which makes sense. Huge give back out of the pandemic. It makes sense. Back to the pandemic levels, and it bounced, and it cannot find the floor, even though the P&L looks unfreaking believable. I mean, talk about look, the increases are not in the bottom line losses. Total revenue they're 10 times 2015. Hell, they're more than twice 2020. They're 3.5 times 2019 without a huge increase in losses. So what are we missing? That they bleed $2.5 billion from operations. So in order to deliver these numbers, even though somehow the net income is probably some sort of a pro forma thing, in reality, they're burning $3.5 billion every year to deliver those numbers. So that's not a good environment for this year. So be careful. Okay, I could take a bet on it shorter term. Like down here, there is short-term support. So I may do a credit put spread this week. I made a note just to test the waters. I've never done a credit put spread on it to see how active it is and how liquid it is and all of that. Let's see how that happens. As long as there's no earnings, there are no earnings. CVX, you know my opinion. I do not like energy stocks. They've been working, but they've been working like pot stocks were in 2017 or 2018. I forgot when they were hot. Very specific reasons are causing them to do this. It has nothing to do with their actual company fundamentals. It has to do with the price of what they sell, like steel. And we don't know that's going to stay here. I can tell you one thing: if if commodity prices are this high, the economy should come to a screeching halt within 6 months. That's my uneducated estimate, just judging by friends of mine who are actually big construction people, and they are like the last stage of building out giant communities. And a lot of their projects are now dying because the quotes they did months ago are no longer valid. So when the customer says, okay, now I'm ready to do this, they're saying, oh no, whatever I quoted you, triple it because of the materials, not because of me. And then they were telling me how they went to their suppliers to buy the materials that they were going to do in this, and the supplier wouldn't even quote them on paper. That's how fluid their prices were. So that is a problem in business, and it feeds the economy because it employs people. And if the people don't have jobs, they don't spend. And then the Fed is stupid enough to not figure that out until it's too late, and they keep raising rates. I just read that the ECB is going to start raising rates. So the TLT might drop on Monday. Okay, so CVX, great company, stock is too happy. If I'm buying it for an investment, I think I'm making a mistake. If I'm buying it for a dividend income, I should pay attention to how little it pays now. It used to pay 6, now it pays 3.4, and at an elevated level. A small dip in the stock will bring a loss on that math. Somebody mentioned AT&T. It pays 9, and the stock is near all-time lows or very long-term lows. That would be a more favorable one. Triple M would be another one. There are a couple other ones that pay 5% with nowhere near the altitude of the stocks that they are now. Okay, Dash, excuse me, it is at the upper ends of things, but inside a well-defined region. So it has resistance, big resistance above. Support below, I don't know how strong. So I would rather buy it closer to 105 or 107 if I'm given the opportunity. Let me see how that looks. Okay, so finally they broke out from this descending trend. If you want to, we should put a box around this guy. That's an important zone. Well, I guess the same zone. Yeah, that's the zone I was talking about. So if you want to see another area of difficulty, it's going to be somewhere around here. So credit put spreads on dips would be better. Disney, pretty messy tape, trying to recover, coming along my line, okay. So hold the support in order to come back and tackle this resistance. So now you have two things. 145, that's the problem area, but also the opportunity to take above, and hold last week's support. You do have support below it, but you don't want to go down too much lower. Why should you do that? So if a stock is really bullish, why should they do that? This is what it looks like. It's not clear support. The whole region is, but it's not clear support. DraftKings, so two stocks that I consider almost identical, Penn and this one. I prefer Penn fundamentally because this is financially better set, more established. This one is more exciting, and they both have the same opportunity. They should have upside if the bottom was in. If I were to bet on either of those two, if I'm an active trader, I may choose this one. But if I'm a fundamental trader that wants to take shares in case the credit put spread gets under hot water, I would choose Penn. So they both have support below, couple of steps, and one that must hold, like 15 here. If you fail here, you go back to the 13, 12, 11, 10 area. Then I will just blindly buy it. But here it is a cautious long. Very similar to Penn. Okay, DNA, if you take out 4.7, I think you have 5.6 opportunity. Or buy the dip for DNA. Technically speaking. But these companies either fly or crash on headlines. So study it. And the charts aren't everything in biotech. I don't know what this is. EQT. Whatever it is, I won't know part of it. All right, so this is a... Whoops. This is a monthly chart. Nice recovery. On this chart, this is a harmonic target 1 almost halfway through to target 2. However, I can't chase it going into 38 or 40, personally speaking, from a chart perspective. But this is a monthly chart, slow moving, so there's no panic exiting. So if you're managing your own profits on a daily basis, I'm not one to scare you out of it, but at least lock some. Boy, 2 times bull of what? Energy. Yeah, if I don't like energy, I twice don't like something that's 2 times energy. You have one candle to pay attention to. This one. On March 8th, whatever happened, you have a wall at 60.8 and a sharp line at 53.8. But that doesn't mean it's a hard floor. It just means that let's look there first. This is a wonky... Look, these lines are some sort of a Bollinger Band, basically bell curve, telling you usually things should be somewhere in the middle, and look at how they're at the extreme level for so long. How long can a stock stay at extreme levels? That's my question. It's literally what these 2 lines are saying, these 2 squiggly lines. These are extreme situations, and they're just bumping along extreme situations. Kind of like a skateboarder riding the rails or a bicyclist riding the rails. How long can they maintain riding the rails? The laws of physics says you can't do that forever, and I think in stocks it translates. Just look back in history and see how long it lasts. Here's a stint here, from here to here. Tony Hawk of options. I'm pretty sure there were better skateboarders than Tony Hawk. I have a signed skateboard from him. Do you want it? And a video clip signing it. My son was all into skateboarding, so we went to a couple of events where it was like 15 people in the crowd. They were actually a shoes event. Okay, Etsy. This is a social media company that kind of does functions like business, which is the best of both worlds, and the stock has not reflected it. Hopefully they're done punishing it. 110 should be bulletproof. 120 should be support, plus or minus $1. 130 is being tested. As long as they can maintain some sort of a semblance of ascending higher lows, that's great. But you're also continuing to have lower highs. So be careful losing 110. That might give us a double-digit entry opportunity, and which I will take. I want to hold it long term on dips. I think it has a good story to tell long term. This red thing is still available, by the way. They're building a bowl to take that out. That will bring you a burst. EVgo, vulnerable to 11. That's all I have to say about it. It has a breakout opportunity. It is in a breakout from here. It has resistance, which could catalyze more upside, but I think technically speaking, it is vulnerable. You can see the internals are droopy. No panic. That I think you could drop to 11. It's a buyable dip. The second target is below 10. I don't think it should go there. So if it comes down to 1050, it is a buyable dip for an investor and a trader. FANG. So this is the oil company, energy company, not, Facebook, Amazon, blah, blah, blah. Every comment about every oil company, it's too high for my taste to invest in. But do your homework. Maybe they did change their future somehow. 1 year of spike in 6 months of spike in I'm not going to say in oil energy prices actually changes the company forever. I doubt it, but hey, you know more than me. Technically, this is not an opportunity for me. My first, okay, let's go versus all-time highs. It's just visually not inspiring. Okay, this is where I'm going to invest in this company. If you're trading it, kudos. You can trade it. Trade around the edges. You have support at 133. Here are my comments short term. You have resistance. You have support. You lose this one. You come down to here. You buy the dip. You take this out. Maybe you make a new high. Or get long here to get to here and get out. Up to you. Plenty of way. Wait. How did we get? Did we skip one? No. Okay, Facebook. I shared along on Facebook, and it played out. So if you're in it, you should be trimming. And if you're in it for the long term, there's nothing to do. The company is recovering. The company is financially solid. Big gap above. Those are tough gaps to start, but it's worth trying. So I would stay long. You have support below, you have resistance above. And if you ever lose the low they just put in, I can't tell you how low it goes. Technically, it opens a trap door that's as big as the bowl, and that's just makes it double digits. I hope it comes down there in a sense. I don't hope it, because people are long, but if it does come down there, I would get long in a big way. See, I did a credit put spread and a debit call spread in my video, and clearly they were both winners. And if you did both of them, you're fat and happy with that. Fortinet, not an inspiring place, but a place that has opportunity. You take that last failure out, you can probably take this one out too. You get to the 400 area. If you dip somewhere in the middle, anywhere into 310, buyable dip for a trade. Gold, the trade worked out. We shorted it on the way up. We went long on the way down. They both played out great. So I believe I booked mine. I haven't re-engaged. I need more information. The one worrisome part is this. I put a line. If you lose this one, you will come down. How far? It could be to 168, but it does have supports. If you take out 183, 184, you may end up coming up to here, but that is a massive fail. GM, I wouldn't want to own it. So maybe, just maybe, like PayPal, they're starting to build an ascending trend, but this is one dip that they bought. I'm not ready to believe them yet. For whatever reason, if the markets hiccup or whatever, if this happens, 32, 30, they're fair game. It's been in the hands of the sellers. I said it could do this. It did. It didn't go up there. They just went down. They didn't even bounce, and then some. So I can rinse and repeat this guy here. So I won't, but I put that instead. Company for the long-term investment, that's on you. I think the American car companies are in trouble if they don't change their EV ways. They haven't figured it out. Maybe they have. I mean, she sounds very confident, so I want to give her all the benefit of the doubt. I don't say short it or anything. I just said literally don't chase them up, and I was pretty right about that, especially Ford. It was up in the 25s, I think, when people wanted to chase it and buy the dip. I said, I think you can get it for pretty darn below 16 and definitely below 15, maybe even 12. All right, Go EV, not to be confused with the EV Go. You can't afford many red ticks. 535 will bring 490. Conversely, nice clean line. Look at that. Wow. So that will get you to 660. Gold. I don't know if the person meant GLD or Barrick Gold, so I shared Barrick Gold. Bulletproof company. I don't know if you know that gold had a horrendous crash in 2011. It is. Oh, this is not Barrick. Okay, so I did look at Barrick, and when I uploaded the list, it just defaults to whatever other gold there is. So this company is beyond reproach operationally because of the swoon. It went into like a huge deep bowl for a long time. So they leaned down their operation. This is the crash that they suffered. 80%. So all the way down, they had to get it down to a science what they do, how they do their business, and they've succeeded. This is a monthly chart, super long term, nice consistent rise. You take this out on a monthly basis, that doesn't happen. Like, I don't buy calls for this. That's just way too far out. You can try to get to here, but so closer to now. This is the problem area that could get you more lift, and I would buy dips into anywhere below 2250. And the company is super solid. The CEO is confident, well-spoken. I don't think they mess things up. So Google, be careful with these splits. I don't understand what the hell's going on. Now everybody wants to split via dividend. Look into the details of what these splits mean. People are chasing them. In fact, one person here needs an answer on Tesla on the chase or Amazon chase thing. Did we talk Amazon already? Okay, so I'll address their question later. I can't remember what it is. So 27.75 or lower. I mean, the last low from this needs to hold. That's the bottom line. You don't hold this, you're coming down to 2700. Look for credit put spread. So if it comes down anywhere down to here, I'll start to get long. Up here, I don't want to get long it. You can buy the rip above this. So if they beat this, you can go up, or if you buy the dip. So BDBR, buy the dip if it happens, like I want to, or buy the rip if it happens. If you buy it now, you're just hoping for a rally, which works if you're an active trader that knows how to stop out. Most people don't know how to stop out. The person that's asking me about the Amazon, and it's not an insult, it's just whether you know it or you don't know it. The person, if somebody bought a call in Amazon and the call is more than 50% down and they're asking me, what do I do with it? Clearly, they're not an active trader to where they know how to stop out. So the first thing when I spend thousands, if I spend 10 grand or 20,000 to buy one call, which is what they cost. I mean, depends on the position or whatever. If it costs a bundle to take a position, I better put a stop loss on it, especially if that position is a long term, because I don't want to be found 50%, 60%, 70% down and then decide, okay, what do I do with it? It's too late to do anything with it. Now you're just, the house is on fire. It's better to stomp out when you smell smoke, not when you see flames. So there are ways you can deal with it to minimize, but to buy it here, and if you don't have those skills to exit, you're just hoping for a rally. That's why most people lose in options when they do that. That's how most people lose in options. No, that's what I meant. Okay. And by the way, this is not an insult to that person. It happens to everybody. GPN, global payments. Here, somewhere in the middle. So short term, you have resistance above and support below. You need clues. If you're holding it, you can hold it. If you're looking to buy it, if it was me, I would wait to 142 and chase it. Or I would buy the 130 dip or 132 dip. I would buy the BDBR, buy the dip or buy the rip. Buying it here new, I'm just hoping this continues. I don't have intelligence that it will. In fact, the internals are also flat, so there's no clues from that either. Garmin, incredible P&L it looks like. I don't know if they're burning cash or not. No, they're profitable. So are they cheap? They're not expensive. 21 and 4, kind of like Cisco, same exact numbers as Cisco. So, but growing much faster than Cisco. Look at the P&L. So whatever they did, they found their niche. Yet the market says, "Fully, no, we don't like you." Look. So at what point do you say they're now ready to stop falling? This is a long base, the longest in a while. This is similar, but not as long. So you can say, okay, they bottomed out. Now I can keep holding. Or if I'm looking for a long, I would sell a put spread and buy a call spread. The put spread says the floor is in, and the call spread says I want to capture a little bit of upside. So I do like that. I've never seen the options. I don't remember trading the options of this one. So I'm going to put a note myself and see if I can structure. Oh, I see already. I did that. Debit call spread off of the base. Okay, so that's a trade opportunity. I think. I don't know. I haven't traded it. Goldman, dangerous company to trade. But if I were to bet on a bank, this might be it, because they are traders and they did initiate the oil up movement. So if I'm right and they're cheating, they should be fat and happy next time they report. So I would not short Goldman into the earnings, especially if it doesn't rally into the earnings, because they issued saying, we think gold's going to 100 when gold was well below 100, and then boom. So I'm pretty sure the trading desk had the drop from the news desk on Goldman to buy calls or invest in oil, energy. So don't short Goldman going into the earnings. This is a risk. Lose this one, it's going to trigger more downside, probably 305. Also, if you take out 347, you can get back to 365. Home Depot. For the same exact reason the logic I mentioned about steel prices and lumber prices and all of that, I worry about Home Depot. This was a stock that could do no wrong, and now it cannot hold the floor. And now if I'm long, I must, absolutely must put a dead stop below the recent low. I did print this that it could recover, but if it doesn't recover, it's going to be a wild ride lower. Look, see, stop out. Okay. If you lose this, I don't know how low it goes. I literally do not know how low it goes. Technically, it could go to 250, 240, 230, 220. It shouldn't, but it will. It has a lot of supports here. But you lose this, and you open Pandora's box. This big. That means the economy really just got whacked at the knees, because this is the ultimate spend company. I don't know what here is. Turtle Beach Corporation. Interesting. So what is this? Weekly chart? Daily chart. Mid-range. Nothing to do. You have support at 20, resistance at 23. Hood. Okay, so I'll tell you a news story. Last night I talked to a parent, and they mentioned Robinhood. Okay, so when the story of Robinhood makes the local news, that a parent that doesn't follow stocks saw it. A well-read parent, I might add, so they do read Seeking Alpha and other things. This was a book to profit moment. What I did is I'm stuck long Robinhood because I got assigned shares because of a mistake I made. I forgot that I had one contract left, or two, whatever, a small number of contracts. So I got assigned shares, and on this pop, I definitely locked my profits on that, because that was a massive pop. So now here's the important part. You take that out, that means something. So maybe 20 comes after that. So what do I do now? If I'm looking to get long Robinhood, I don't know why I would want to. Base is above 12. Lose 12, you erased all the good news one more time. But if you don't, and you hold this ascending higher low, then you can eventually take that out. And you take that out, you're going up here. But that's a long-term plan. And I don't know what they're going to do with it. I mean, the platform has users. They just need to get out of the news. All right, Brad. Yeah, I remember you mentioned that. So HYMC, Highcroft Mining. Well, wow. So look at the growth in revenues. Yay. Look at the growth in losses. No, not for me. Trade, fine. Just a messy chart. I don't know what you're going to do with that. Big gap here. A lot of sellers up there. It's not for me. Do homework. IBM, maybe an iron condor there. It's okay. So if IBM loses, oh, okay, right there. I just saw that. If they lose this guy, they fall to here somewhere, that triggers a bear. You can see it, shoulder, head, shoulder, versus this guy. So which one breaks first, this or that? I'm betting neither do, so I would do an iron condor on it. I'll check the premiums to see if it's doable, and if there's no earnings, I may share one. This one is ready to pop, but with a major fail right there. So that is important to say. Resistance, major prior fail. Oh, come on. Tax season pop in Intel and ITU. What? This is the only tax. Oh, tax season. Who knew? It's coming? Oh my God. Snuck out of nowhere. It's non-event. Just trade the chart. Tax season is all year long, by the way. I don't file my taxes around this time, just to let you know. Okay, so the sharp failing points offer the opportunity for breakouts, and this one has an immediately very sharp failing point above it. So be careful getting faked out. It does poop and then comes back down. Higher lows is good. Opportunity to break out. IQ, I wouldn't touch it with a 10-foot pole. Why? The quote, internet of China. I mean, Netflix of China. No, no, thank you. I traded it very well in the past, and then it bit me the last time I tried it, and it's like, no. If I wanted a Chinese stock, I would use Baba, JD, or Baidu, or the FXI. Why would I want to take on the junk from IQ? Nope. IWM. Okay. This is the IWM. You have a base below, you have opportunity above. Which one will break this week? Will we lose 203? If so, we'll get back to 198, 196. Or if we take out 212, we'll get to the 20s. Simple as that. Simple as that. By the way, you don't need to ask for the indices in here because I do a whole video about it. Maybe you were new. I do a special video tonight, 10 minutes long, about nothing but the indices. But I did answer the questions anyway. I don't know what this is. Looks like it has short-term support here, short-term resistance, which is also the catalyst. 266 is where I would chase it, above 266. It is a micro cap. Jets, it's in resistance. It has support and it has resistance above. I think it's vulnerable down to 1950. Very weak assessment. I mean, I don't know a lot about it. You could argue that there's some deterioration in the internals, like the relative strength index. KHC, there is a company that provides 4%, but it's still too high for me relative to its old days. So look at these sharp failures above 40.5. As sharp as they are is as strong as a catalyst they become once you pierce through them. I would rather buy the dip towards 38 or lower, maybe 38.50 or lower. It looks like that orange line is solid. The whole area is pretty wide, so you have to respect the action in this, quote, boring stock. What? I mean, okay, rinse, repeat. The same comments I said about KHC is here. KO, up here, what is happening? Why is this happening? Yeah, so here's a quarterly chart that says, y'all crazy. This stock is a $43 stock in the next 8 months. That's what that thing is saying. That's all I'm saying. Eventually, this I don't know. They're chasing something with these stocks. I don't know what they see with KO, but there it is. This will end in tears. Short term, 60.7 is the target. Vulnerable to do this. Somewhere here, there's a drop to here, bounce, come back, bounce, come back to here, boom. And this is going to happen. I can almost guarantee it. I don't know what this is. This one is also vulnerable, but I would not want to short it. Cosmos. Oh, shoot. Okay, so I would not be long this, just in case. I don't want to short it. I don't know what it is, but I would not be long just in case. K-Web. Everything I said about that other Chinese company, IQ, is what I would say. Well, it's a bet on Chinese companies that they're done being beaten down on. So 60 minutes, 120. So it looks like Baba shares stock. So if you want to be long Baba, you can be long this one too. But same risks. I mean, why not above 33 yet? That headline last week should have taken it up there. Lucid. Base, we'll see. You can count on it until it fails. So you have support and support. You lose this one, you're going much lower. Arguably, they're still pricing this guy. Kind of like Bitcoin. Fell below a neckline. They're just above it, but now they're back below it. So they're still struggling to recover the neckline. You have a catalyst at 28.1, 28.2. This is a headline stock, and the headlines do matter here. Depends on what they are. If they say, okay, we are ahead of schedule, that matters because that's going to impact their P&L or not. So pay attention to those headlines. Don't be too... I wouldn't add if I'm long, and I wouldn't short. Okay, so we could not have played this one any more perfectly. If you've been here a while, when it rallied into high heaven, I shared a short LMT trade with a credit call spread and or a debit put spread, these two boxes. I sell risk and I buy risk. and they both played out perfectly. I did this, I did not do this. So I won on that one, and then it fell, and I said I didn't hate the company, I hated the price action, so I'm going to do this. I did a credit put spread and I shared it, which turned my trade into an iron condor, and then it bounced almost the next day. So we could not have played it any more perfectly, and now I don't want to do anything with it. I'm done. I could renew another iron condor, but I had specific reasons to do those other ones, and this one is not very liquid. If you try to execute, it was a little bit tricky. Okay, I would not be long this one up here. Southwest. It is vulnerable to 43. 43.50, it has support. It has support at 45, but it is, I guess I should put those lines. I would buy the dip down here, so I'll put an alert. When I say buy the dip, means I would try to get long however I get long. I should find a better expression for that. Any ideas? Instead of buy the dip, get long, something that's easy to say, hopefully. I'm updating the chart as I go. So somebody's asking, what time do these meetings start? They start 7 a.m. Pacific, 10 a.m. Eastern. And you're saying, why are you doing it so early? I'm in California. Hey, I'm in California too. But it is Sunday and people need a life. So I thought this was a happy medium. Besides, I record them. Oh yeah, and those are my notes, Rez. I used to say long, but this was not a conviction. Long. MasterCard, great business, all of them. On dips, I would get long. Here, it's stuck, resistance and opportunity to buy the dips, so that's why I'll just wait. Mosaic, everything I said about oil, energy, except here, in fact, we are running out of food. We are, my biggest fear from the pandemic is realizing how fast we are multiplying. That the last time we had a pandemic, we had like 1.4 billion, and now we're like 8.5, 8.4, whatever, over 8 billion people. At this rate, we will be like 30 billion in 120 years, which will kill the planet. And we will. I read somewhere that we will have to skimp for food at 12 billion. That's going to happen in the next, 30, 40 years. I'm not statistician, so do your own homework. But what I'm saying is that this actually may have a sustained run on it, because I think Mosaic contributes to providing faster crops, etc. Here's the big picture on it. It is extended short term, but I wouldn't short it. And if somebody's buying it for a long-term investment, it's not as counterintuitive or soundingly stupid as buying an energy company for the long-term investment and a fossil fuel energy company. Okay, so I don't have anything against being long this one from an investment perspective, although it wouldn't be my choice. MRO, exact opposite of the other one. This one is a fossil fuel energy company, correct? Production, marketing, liquid hydrocarbon, and natural gas. At least it's better than the other ones. It's technically going into a very long-term node. So if you take this candle here and draw a box around it, why this candle? This is a month chart. So for a whole month, it battled over this zone and closed somewhere here. Those are important lines. That's how it works. So this is a month-long line. This is a monthly doji. Close-ish. So these notes are for me, that these are long-term lines that matter. Now back to the short term, so we can see them in perspective. There they are. That's the big box, and that's the line. So this will get you here. A dip will be buyable. So trade the short-term range, knowing full well where you stand next to this long-term potential problem. Morgan Stanley, almost the same comments as Citigroup. I fear this. and look for that. So if you're buying the dip into support, kudos, that's fine, but you need to stop out. Hopefully they hold this, and if they don't hold this, I would be out, or look for dips down here for buying opportunity, getting long opportunities down here. So this is chaseable to here. This is buyable, so you can swing back up, but with tight stops. Earnings are coming soon, so they don't have a good history of doing well on earnings. Microsoft, vulnerable, still vulnerable for, I'd say, 296, 298. It doesn't need to go there. It just broke out, and it's trying to establish its footing. So this week, if they can hold above 305, 304, 303, they would have an opportunity to break out of here. So this is a possibility, at least, and that would be one of two, this and that. It's even higher than this, but anyway, so this is the opportunity. I'm going to put an alert. I can't believe I don't have an alert. 350 question mark. Question mark means go check it out, revisit. I can stay long is what I'm saying, or buy the dips if they happen. Who is this? Oh, Micron. I may write up a credit put spread. Their business is solid. I don't think they should crash. I don't think they should go to the moon. I think they should be stuck between 86 and 68. So I may want to do a credit, maybe an iron condor. I'll see if there's enough premium. Brad, I don't know. I didn't pay attention to MOS, but usually, yes, if you have 3 fails or 4, multiple fails at the same place, very sharp fails, that becomes an extremely big wall, but an extremely big catalyst if they actually can take it out. It could be bear traps. MULN, I don't know much about it. From the chart, it looks like 350 is a problem, so is 42. So first problem here, that if you can take out, gives you a catalyst to get to here. If you take that out, you give you a catalyst to get to here. Or you buy the dip. They do have support down here. Net, yes, delivered. See, credit put spread, debit call spread. I share it. I shared it, and which means one type of risk I shared is to sell fear down here, and that delivered profits. And somebody could have bought calls or call spreads, and they also made money. This is a reason why I put all these circles. Kind of like Bitcoin, they went above it, but they're still trying to legitimize it. So Bitcoin went above 46, but now it's kind of below it. And so going above the problem area is step one. Coming back and testing it for footing and coming back, to that would be the best. So we're not in the clear until they take these out, or at least until they get above 126.5. Netflix, I'm starting to hate this stock. The price action, the opportunity is there, and it's too great to pass up, but you have to be very diligent stopping. So if you get lower lows, you're coming down to 348. If you take out 390, whatever that number is, 395, 396, actually be patient to 398. You will get up to 428. So I guess this repeats up here. So check it out. So this played out, right? After a lot of struggle, it finally played out. Okay, so what do you do next? Somewhere here lies a buy the dip opportunity. They're going to struggle here. They're going to come back up, struggle somewhere, and then come back up. And you do this. I eyeballed it here. Let's see. Perfect. There's a gap up here. Not quite gap, but anyway. This breakout has more upside. I didn't give it all its credit. Tough resistance. Breakout line if taken out. Okay. Support. So if it comes down to here, I'm going to say get long, credit put spread for swing back up. That's 30-minute chart. No, 60-minute chart. So if it comes down to here, I'd want to get long, actually higher. Okay. Neo, nailed it. If I did a video for SoFi and Neo, I did disclose it. I did scare people out on purpose. I said if you can stomach the risk of delisting, blah blah blah, because that was still ongoing, you can get long Neo. I also then again I did one that's less scary, which I suggested a credit put spread, and that's also played out. So we can do that over and over, but right now it could be doing this. So if somebody's long via calls and they stayed long, I don't blame them. You should track the progress against these two fails, because this one is a small catalyst, this one is a big catalyst, which means that this one is ongoing. Also, you need to you don't want to go below 20.8. It's just annoying. There's a gap down here, so it goes to 20. It doesn't erase the upside opportunity. It's just a setback that wasn't necessary. NVIDIA, this yellow thing is ongoing, even though it went up instead of going in a bowl, but the prospects are, it's an ongoing thing. And maybe they're out of this sell the rip mode. So let's see. You want to hold support, so you do not want to lose 255, and I'll tell you why. Somebody asked me, is it bullish, bearish? Do the charts look bearish of semiconductors? And I think they're looking at what I'm seeing here. So if you look sideways, there's a head and shoulders here somewhere. How? There's a shoulder, there's a head, and if this fades and comes back to here, maybe they go to here. So this is important to hold. So this support here is important to hold. I don't like to chase downsides here. Like, oh, it broke the line, let me chase it. Yes, technically this is a trend line of sorts, but I could have drawn it this way and it already be starting. So I would rather see them lose the last absolute bounce level, and I'll forego this potential downside. I'm more concerned in trying to catch a base rather than trying to short it. So is it a bearish chart? No, because there's a breakout opportunity here. And it's higher lows, and the bulls are in charge of late. Octa, they're still not done. Still in the descending channel and in the middle of the range. So it's basically here. In this rally, drop, rally, drop, rally, drop, rally, drop. I wouldn't want to bet on it. I could sell a credit put spread for a short term and hope for the best. Oracle, I wouldn't want to be long here. It is almost at target. It is at target 1. It near target 1 or target 2, but it still looks heavy. It has volume support, that orange line, but I think I would rather be long somewhere around 79. Conversely, if they take out 85 or 84.5, whatever that number is, catalyst to go higher, it's an inverse head and shoulders with a lot of upside, and I mean like a lot. Let's see how that works out. Yikes, yeah, we should draw it, okay? I don't want to scare people out of it. The opportunity is way too big to just pass it up or not look at it. So it is a neckline that is a potential opportunity to break out. And I wish they didn't do this, because now the inverse head and shoulders looks wonky like the other one. You know, I don't like backwards slanted inverse head and shoulders or cup and handle cup holders. Okay, so the upside opportunity could be as big as this. So what you want is them find a bowl here that they can hold support, come back and take that out. Sellers lurking. You have to be you have to be honest with yourself. That's not easy. So let's put an alert. What the hell? We'll put an alert. Ooh, I'm starting to get out of energy here. That's too early. So support can get there. Okay, guess what? It got there. Who is this? Oh, O'Reilly. By the way, O'Reilly run much better. Maybe it's because his buddy works there. I don't know. Gets discounts. This is a base. short term. You can see it. I can, quote, assume it's a base again, even though I don't like how fast it's falling, but that's how it is. So choppy. How are you guys trading this? Via options? Is it liquid enough? Anyway, if I'm long, I should wait to see what happens here. Oxy. I love this company. Well, I don't actually, if you've been here. Range bound, middle of the range, respect both ends. Above the upper end, it's got open air. Don't short it just because you don't like it. Below 52, it becomes at risk to a 5-point drop. Oh my gosh. Okay, but I better crank through those. So there's nothing to do in this one. If you're investing for the long term, do your homework. I don't know, something weird about it. Are you on Team Buffett or Team Icon? Icon made $1 billion and walked away. Buffett keeps adding. Vulnerable to 575. Okay, 572. Vulnerable to 572. This one, if you take that one out, you get more upside. Even then, it would still be vulnerable. The internal, check it out. You've heard the term divergence. Higher prices, lower internal strength. Not a good thing to have. Shortable, in fact. If you, okay. So let's see here. Penn West, Palo Alto. Vulnerable 570. Credit call spread? Question mark. If you really like drama, do a credit call spread. Or a credit call spread, a tight credit call spread here with a tight stop and a credit put spread here. So an iron condor or wonky iron. I'll share it if I can brighten it up. I'll share it. Path, I wouldn't touch. You lost reference. Don't touch it. Why? Plenty of other stocks. If you're long, stuck long, see how they do versus the week's low. Read the reason they fell. Growth slowing, expenses growing, what? This is not enough history for Wall Street to say, yeah, we can buy the dip. They don't know, so they ditch it. Pinduoduo, I wouldn't want it. There's nothing to be done here. From here, okay, this played out and then some, and now they're back halfway with a big gap down here. Why? If I want to do a company like this, I would do something less representative of it, but less dependent on its own outcome. So if I got long up here, I made a mistake. I should decide how I get out and when. Penn, I already told you everything about it. I want to get long. I want to sell a put spread. Maybe in somebody that wants to invest in it for the long term. If they buy calls or call spreads or shares, be careful how you do that. You want to structure it in a way that time, buying leaps is not foolproof, as people would have found out. Hey, I bought, a so-and-so leap way out there in the money, and now I'm down 50% of my money. I thought leaps were foolproof. They're not. Leaps are no different than regular options. Just longer time, bigger money. That's it. Slower moving, less opportunity to scalp profits short term. They're not a panacea. Palantir, finally, some respect. They're not out of the woods. You take out 1450, you can get to 17. That line right there. So I guess I'll put an alert. 17, question mark. If you're long, you can stay long for the long term. This is a stock I would accumulate for the long term. The business is growing. There is a caveat with the government. The decision-making process with the business in the White House is iffy at best these days. So I don't know if they're going to cut them off completely. You might wake up to a headline that says Palantir lost the White House business or Pentagon business or something. That's a detriment short term. Meanwhile, they've lost some business, but it hasn't slowed them down. So they're offsetting it from the private sector. But I don't know if it's 50-50, 40-60, what? You got to make sure. Okay, PayPal. Somebody said, I'm long in PayPal. I can stay long PayPal. It is so undervalued. The drop was so long and so undeserved, almost like Affirm, only worse, because it's a much better company than Affirm. But look, bought the dip, just like Affirm. Everything I said about Affirm applies here. Finally, building an ascending trend, question mark. Don't make setbacks. Don't fall below 109, 110. Why? If I sold a put or a put spread, I'm fine. I repeat for as long as this trend is going. If I want to own it for the super long term as an investment, fine. Not all in. Leave room to add. This one I would walk away from. It's just, there's no need to mess around with these. If I got stock long, okay, it's a good business, so I can sit in it. But if I'm looking for an investment opportunity, I better trade it as treats it as a trade, not an investment, which means I get in with a specific stop out with pain. X level, X% lost, I'm out. Down here, it should have support. Swing to 52, possible. So credit put spread may be for that opportunity. Okay. Where are we at now? Roblox. Why did we jump to R's already? Okay, we got there. Credit put spread for swing. And so basically, I'm saying if you want to swing trade it, don't buy something, sell something. The risk is the same. Why don't make it where it doesn't need a rally for you to get paid? In other words, if you buy $500 worth of calls, you need to move to profit, otherwise you lost your money. That's a fact, okay? Why not take a risk that would risk $500, but you collect 100 or 2 and need nothing? Because if you buy $500 worth and you get 20%, that's your reward. Instead, you sell a put spread, you collect your reward up front, and maybe you risk the money in the end. You see what I mean? That's why I prefer credit put spreads over debit calls when things are so iffy. The stats are the same. One allows for a drop and don't need a rally, and the other one needs an absolute rally or you're toast. Regeneron, I forgot what I said. What did I say? Regeneron, whoops. Not for me. 710 versus 670. That's what I said. It's got stuff above to look for, stuff below to look for. Is this rank gold? Royal gold. It's almost like it's up in the air, up in open air. So 1 month. Yeah, you take that out. I mean, I never would invest in a company this high, but if you're actually trading momentum and you want to buy the breakup from this for open air, go right ahead, but you better know what you're doing. Or wait for a drop. Where to? 130, 120, at least 130. It's not an insult, by the way. Just price action thing. Okay, here we go. Roku. I like it long term. I think this is still going on. So if I'm not long and I want to sell a put spread in Roku, I can do that. If I want to buy a call spread, I could. If I do both, I could. I prefer credit put spreads. You just heard my spiel. Now you take that out. It's going to 160. So it's worth sitting in it. Schwab. Low, high, middle lies the truth. Too choppy here. So if I'm long, it's too late to panic. If I wanted to get long, I guess I could, but I don't have a reason to. I don't think it's liquid enough for credit put spreads. If you're looking for a long-term investment, you'd have to incorporate the longer-term view. Bulls are in charge. Buy dips. That's the message. What dip? Look at this. 76 looks pretty pointy. Except that looking at this, it's vulnerable for a correction. A big one. So don't be surprised if you see it in a couple of months at, I'm not going to even say it. Let's say below 68. Okay, so don't go all in is what I'm saying. SE, I don't mind being long. The P&L is super strong. The price action finally may be stabilizing like PayPal, but there's no evidence yet. PayPal's already started to go up. In this one, I guess if I go to the 60-minute chart, I will see it with these two dips. If I'm long, I'm staying long. If I wanted to get long, I don't mind loading up, starting a position for the long term. Selling puts to own shares and buying calls will be one way. Buying call spreads will be another. Selling a credit put spread or a combination of those. You have support, you have a breakout. Which one happens first? You take this one out, you get to here. I don't mind it long at all. At all. I may write it up again. SFIX, I don't know why anybody would want to invest in it. It is an iffy company. Not right now, you have a trading zone. You can go up and down. So you should do your homework on the company and see if they're doing things right, if they're progressing in the right way, if you believe in the company. Otherwise, don't invest in it just because it's down. Just make sure you know what you're doing. And it's not a SPAC, so the $10 magic is not really magic. Remember, Macy's is like a $5 stock at one point. I don't know what it is now. Okay, Shopify, very active stock. You have a big catalyst at 760, and you have a big support at 665. Lose either of those two, you will have a big move in that direction. Now, what the fudge is going on with 780? Yeah, just be careful. There's something that happened at 780 that one day. Don't know what it is. So don't short with conviction, and don't go too long without protection. What is this? Ugh. Yeah, back to base. So technically, this is a breach of support, so it should go to minus like 15. But since we don't go minus here unless it's oil, 350 is fair game. I mean, I don't know why anybody would want to invest in this unless you know the company. So find out more about the company if you're catching the falling knife. SoFi, I would comfortably be long. I am comfortably long. I did share it, and I doubled my money. I lightened up, but I left the core position on. Why? It's relatively long term. I have a couple months on it, and it could be that, okay, they held support here, they're holding support here, they might be swinging back up to here. So I want to see if I can capture that. If the market does that, this one should have no problem. And then maybe, whoops, and maybe they finish the job, the red job, this and this. So they failed to break out here, but they did break out here. So, and hopefully this holds. If this doesn't hold, back to square one, literally. SOL, I doubled my money, literally, almost. Last batch I bought, when I told you guys I would buy at 33,000 Bitcoin, when Bitcoin hit 33,000, I took my coins and I named my coins ahead of time. I said SOL, CRO, and Ethereum. All three of them are flying high. My last batch was at $77 or $78, and now it hit 140 something. Am I closing it? If I was trading it purely, yes, that would be a place where I would lock. I didn't, because I've already locked. This was the core position I wanted to keep. So what did I do? When I took it, I committed it to staking. I locked it physically, so I can't sell it because they pay me tiny interest on it. So I'm accumulating SOL coins, fractions of them, for holding the SOL position that I want to hold. So I'm hanging on to Solana. Okay, if you're looking to short sellers, I don't know how fast you are, and I don't know how you short. Shorting stocks is not a thing I would ever want to discuss unless it's via a credit call spread or buying a put. And that company looks too small to be able to mess around with options. But if you want to reach out to me during the week on that, I'll be more than glad to help you out. I don't want to say anything about shorting a company like that outright, ever. Okay, Spotify, I don't mind being long term. You just have to make sure that it's not burning cash. There's an opportunity just above. These two candles are death, so they would be an incredible catalyst up. So I would want to see it at 159.50, better yet 160, to get to 172 and 180. Higher lows is good. Beating up on a prior fail gives you something to shoot for. So dips to 144, better hold. There's no reason to get lower. It doesn't mean they don't go lower, it's just there's no reason for it, which is a reason to worry if that happens. Okay. SPY, again, I have a whole video going on that thing. I don't know what's your spiel, what's your speed. Below 449, we get to 442, 441. On a daily basis, it's going to 438, 436. I've said that, and everybody gets upset about it. I'm just reading the tea leaves. This chart tells me it's going to 436.5, 437. It doesn't need to go there, but it's a potential target. I am trading it on the long side and the short side. So I want to stop. Here's the thing. A dip is fine to come back and take this out and make new highs. We take this out, we would be on track to make new highs if we can deal with these two first. But I think this will give us enough oomph to take these two and get to the 490, 500. Nobody's talking about that. It is a possibility. Square Great company, finally done falling, maybe building an ascending trend line. So now your next catalyst is this one, 150. It's very clear, with an immediate problem at 153. So I'm going to put an alert, say 190 plus, but listen to the note, question mark. So come back and revisit, and 153 fake out potential. Do I have lines? Yes, I do. There it is. Suave did its thing up here, not for me. So we drew these. I don't remember anything about them. I know somebody thanked me for that trade, and they made money. I would walk away. AT&T, somebody's asking if it's okay to accumulate and sell covered calls. Yes, it is, because this one pays 5% almost. Wait, what happened to the 9%? Did they cut their dividends? Just last week, I guess it must have rallied a lot. Okay, so owning it, now it's 5%. It's still a good bit of dividend, but the yield has dropped because price rose. I would hold it. I mean, I don't like the company, but yes, if I own shares, it is a viable strategy. I'm collecting premium from the yield. I'm collecting premium from selling the covered calls, which is an additional synthetic yield. Teladoc, I still think it's got a catalyst waiting for it. 81.5 could bring 100 plus. Many R's. So it is an inverse head and shoulder of sorts, but it has many problems. None larger than this guy. The business is fine. Are they bleeding? I can't remember. I know they have a big growth business. They're not bleeding. Yeah, they're fine. Treasury Bull. Okay, so this is the TNX on crack. So I'm long the TLT, and I was profitable on Friday. I was red. I was profitable. I was red. I was profitable, and I was profitable last. So Monday we might suffer. This might rally big time. If indeed I think this is what. No, this is the TLT. So this is the TLT on crack. Okay, so this might drop on Monday. Might. I'm still long this via the TLT, which is not leveraged. This is leveraged. I wouldn't mess with this. It doesn't look liquid enough on options. If you're trading the stock itself, that's fine. Whoops. So the IMF or the ECB is now starting to talk. Those guys are nuts. We think our Fed's nuts. Those guys are nuts. Absolutely nuts. At least with Draghi, you knew where we stand. With this girl, it's just amazing. Lagarde, Christine Lagarde, I think her name is. She's like, a month ago, I totally remember reading that they're QE forever. In it until as long as they want, and now as soon as we're done tapering, we're going to start raising rates. Like, wait, what? That's a complete 180. Maybe I misread. Anyway, it's going to affect the prices here because that kills TINA. So now there might be an alternative. There is no alternative to buying TLT. Basically, that's the acronym. So we'll see. I'm long this basically is what I'm saying. TQQQ, again, this is the market. I opine on the market tonight, but you have support below and a catalyst above. So if you sell a put spread and then you capture the upside, you're golden. Tesla, not an obvious opportunity here, but boy, I do not want to short it. 11:15 opens open air. Buy the dip anywhere below 960, and it can get there. I think it is vulnerable to get there. 960, 980 depends on what time frame you're looking at. So it can get there, and if it does get there, have the guts to catch the falling knife from a trading perspective and don't panic out. Now TSM, I don't know why the action is so crappy, and I don't know why I would want to mess with it. The company is good, but it has the Taiwan element. So it has the market element, the fear of everything else in the market, and the fear of tech. And then on top of it, China and Taiwan struggle, maybe no struggle. Who wants that? So if I wanted a TSM, I would rather go to the industry that doesn't have Taiwan headlines in it. TTD, this is a daily chart. it's going into a resistance zone. So if I go shorter term, I may even see a little bit more granularity. The breakout is ongoing, and as long as they hold the lows from last week, they should have more upside going through that resistance. So resistance doesn't mean impossible. It just means that you need to behave properly, and they are. Higher lows above the neckline, that's great. Thank you. Take two. Didn't they get bought out? Is that them? So tell me if it is. If it is, why are you trading it? I said if that's the one, I said you should just buy puts in it because that arbitrage number is way too big, and they usually fail when they're that big. So I can't remember if this was the company or not. Nobody? 93 people? Nobody? So technically 160 is a problem. You take that out, maybe you get to 170, 175, maybe, with a whole bunch of fake outs. You have support scattered. You lose this, you're going back down lower. Well, you would find the recording once we're done, and I would post it in the chat rooms everywhere. So look for it there. It takes a good couple of hours, because the long recording, YouTube takes forever to convert it. Uber, higher lows, struggling with catalysts. You take that 37.50 out, and you can get to 42, 41, 42, 41 plus question mark. Question mark is because there are plenty of reasons to be failing in between that. Long term, there's nothing to do here. Buy the dip has worked for a long time. Upstart, we nailed it. Right, that's my point. The acquisition cost of ATVI, that was the one I'm asking. So it's not take two. So never mind, it's ATVI. Okay, thank you. Upstart, we nailed it 3 times, and I feel like it's playing roulette. You click and nothing comes out. You don't want to click again until you're absolutely sure. So this last credit put spread, debit call spread worked. I didn't do the debit call spread. I just did the credit put spread. So here, it does have support. If the market stabilizes, this is a likely path. You take these out, it'll be here again. That does not mean you load up with calls. This is the stock that can bite you hard. So if you do buy calls, you must set a stop. And I don't mean mechanical. I don't know how to set stops. You have to track it, put an alert on your chart somewhere. Yahoo probably will give you free alerts. And when you see an alert of price below X level, you should jump in and stop out. You cannot ride this down. Vroom, weird. The P&L is unbelievable. What's going on? It cannot find a buyer. Let me tell you what's going on. It's losing a 600 million out of its own operations. So they cannot continue to borrow to exist. So between this and Carvana, they're both big spenders. I would rather take Carvana. This tells me there is something seriously wrong, and you need to pay attention. The stock market is telling you something. Now, technically, they're also saying this anyway, I don't want to say it. If you understand the company and you think it's going to high heaven, own it. It's $2.60. It's better than buying calls. If you want 300 shares, buy half and add half later if it falls to $1, I guess. I don't know. This way you're not averaging down. You're averaging in. But the market is telling you there's something wrong with it. WBA, I nailed it. On earnings, I guess down, and anyway, so must hold levels, went a little deeper than comfortable. It is in support zone. See this arrow? This arrow is from up here. Maybe they're there. They do have support below, but it's not sharp. Check this out. What? Okay, so where it is right now, it's not a coincidence. So it went as low as this. So this whole zone is supportive, but look how far back it has been. So I can't count on it. So if you caught the falling knife, it's okay. If you're long already, it's probably too late to panic. Walmart, not for me up here. It did deliver. I said it's vulnerable. It went against the vulnerability, and it beat my concern, my level of concern here before. So I changed it to say vulnerable to a dip, but it would be a buyable dip. The reason why I don't trade Walmart, because it doesn't have good premiums for me to sell. Now, if you take these out, open air. So if you own the shares and if you want to ride longs, go right ahead. If you want to buy longs, go ahead with a tight stop. It's a trade, not an investment up here. I don't know what this is. WRE. Okay. It's too high for me, but it's strong. So you can, it's almost the same comments as Walmart. If you're long or you want to get long to ride this up, that's fine. Just know it's not an easy investment. It's not an obvious investment entry point. Okay. Whatever I said about these other two, I say over here. I'm short X by selling a call spread up here. I saw this coming, so I'm like okay with it. So I haven't capitulated out of it because I sold a call spread. I was green, I was red, I was green. I didn't book it, and now I'm slightly red. I didn't book it either. Did I do anything with it? No, I don't think I did. So I would not be surprised to see this at 28 in the next 6 months. I'm just letting you know. Not in a straight shot. It has a lot of support. It has some support at 34.8. It has a lot of support into 32, 33. And more stronger support. The support grows as you go lower at pivotal points. So like 28, 29, let's round it. It should be super strong support. Look. Okay, I can't believe it pulled up. Is this the right IFX? Is this the Zetron one? Yeah, okay, good. Because I fed it and I uploaded it, and last time it didn't work. This time it did. Okay, so it kind of looks like Taiwan Semi. Semiconductors bounced, and they're facing lower high sellers. And now you want the support to kick in on this dip. So I don't want to see it lower than these guys. For me to say, okay, I'm comfortable. It can swim back up and take this out. So this would be the place where I want to see them take out. As long as this holds. So you have support below. You want this hold so they can take this out. And then this is a bigger problem. That orange line is a volume. All right, Exxon. You see it. I don't have to say it. You see that head and shoulders. I think Exxon this year will be under 70 at some point. So if I'm an investor, that should scare me from starting a full position up there. If I'm an investor, I should at least just keep some powder dry, as they say. If I wanted to short it, I could do credit call spreads. Out in time, way above here, and just don't worry about it. A small risk. I can even do an Iron Condor because I know it's a good company. And they have excellent management and all of that. Lose 76, I think the debacle will unfold pretty quickly. Yandex, why? Nope, not for me. I mean, stock-wise, there's not much you can say from the daily. Was it halted? What are these? Anyway. Big problem. Wait, that's not it. See, it didn't load the right one. There we go. All right, the one daily. Yeah, there's no clues from the chart. So you're going to have to do homework. We go back to 2016. I don't know. Something's wrong. Do your homework. Find out why this is happening. Meanwhile, 24 is your line. I don't think it's doable. Not easy, I should say. All right, we finished those. Let me see if I can find those questions we had. Okay. Somebody said, help, I'm new. I don't know how to use your service. So I'm going to do a video on how to use my service. Basically, I didn't see Zoom. Oh, Zoom. Okay. Yeah, I'll do Zoom. I'm long. Stay long. Let me see here. The idea is to read my notes in the morning, watch my video on Sunday night, tell me what stocks you want to look at on Saturday. It's Friday, Saturday, so we can do this and track them throughout the week. And then every day I provide a write-up and you will get a video most days with a full write-up setup. And these days I've skipped one or two, but I offered more than one or two on other days. So all in all, I'm pretty sure I'm committed to delivering the 4 or 5 ideas. And listen to the video, because it has usually nuances, who should and shouldn't do this, and all of that. So I'll try to do a short video to help with that. Chewy, I already answered. T, I already answered. Oracle, I already answered. They're in at 83. They want to do covered calls. They can, as long as they don't force themselves into closing a losing position. Okay, somebody's asking, how do I close spreads? I think it was Mimi. Mimi, it's easy. You open a spread, you close a spread by reversing the trade. So usually a spread involves 2 option positions, 2 option legs. I buy a spread by buying 1 call and selling 1 call. Okay, so there we go. I do have videos on that, so you might want to watch those. So if I buy a call, it's green. I sell a call. Now I have a debit call spread. I need price to rally to make money. I opened it. To reverse it, I just do the opposite. I sell the one I bought, and I buy the one I sell. And I can do this on 1 order ticket, most platforms. So that's it. If I own a debit call spread, to close it, I sell the call I own, which is the lower one, which is more expensive, and I buy back the one I sold, which is the cheaper one, higher, to close it. That's it. Okay, so that's another question. All right, bought SPY 450. Okay, so somebody else says they bought an SPY call at 450 expiring Monday. They're up slightly, went to close it. That's on you. You had profits if you bought it inside the chat room, because we were buying upside moves. If not, if you bought it on your own and you had greens, I would not wait. And then the second part of the question, is it going up or down on Monday? I don't see the future. I can tell you when it opens on Monday how price is going to move within the day, but I don't know what they're going to do going into the open with all the headlines that happened from the weekend. Anybody that can tell you that, they're lying to you. I can't guess the future. I can help you manage. So as to when do you close your profits? Whenever you want. I can't manage your portfolio. So you can ask me questions during the day in the chat room or in the live room. I can help with that. But I can't tell you, hey, it's time to book your profits. That's on you. It all depends. It's a fast call. It dies on Monday, so don't wait too long. And if it opens up and you're green, manage your profits that way. John, reach out to me in the chat room. Okay? And also, somebody's asking, why is X rallying? Don't care why. Just trade the charts. Find out why if you're investing in it. If you're just curious, Google it. There are plenty of opinions as to why. Robin, I sent out a note on Friday with a form and a link to the meeting. So look for that next Friday. Next Friday, you will have a form. The form is there all the time. So if you find the form, it's there all the time. This form is dedicated just for the Saturday meeting. There you go. That's one reason, Rez. If you're in the chat room with me, with Matt, it depends on your setup. So if you have your setup opt-in with, I think you're with Benzinga. If you have the setup opt-in for that, then that works. So it's your setup. I put everything in the chat room. Everybody here, I am 1,000% certain you are in the chat room. Go there. Everything is there all the time. Everything is in the chat rooms all the time. So if ever you're saying, well, I don't see it, I don't know where to go to the chat room and ask. You will find it. Just go to the chat room. Somebody will help you out. Okay, so again, Shashi, in the chat room, you will see the live room links. Every day I break out from the regular chats. I added another service that ties me up all freaking day. I'm sitting in my chair helping you guys out. So I share my screens live for whoever can attend. If you can't attend, you're not missing on anything because those notes are not for you. They're for super fast traders intraday. I share a link in the chat room every day. You click on it, whoop, you're in the live room. Then you're chatting. We're like this. I have a microphone. I have a chat. You're looking at my window just like now. Exactly. This is what you're looking at. And we'd be trading these things. So I know you're new. I saw your note. I told you I was going to make a video to make that clear again. I had one video, but I added the live room to it, so I'll update the video. All right, folks, I got to go. I have another commitment. I think I got all AMC, MU. I addressed those. Amazon, the Amazon, okay, so I told you what I thought about the Amazon call. You have to make the decision whether it's time to cut it loose or not. I gave you the information on the chart. We can discuss it tomorrow live too. LTC USD. Somebody wants to go Litecoin long. I wouldn't go long any crypto right here if it's for a trade. If it's for an investment, just buy a little bit. So, okay. It takes at least a couple of hours for YouTube to translate the video. It's not on me. I push it up and it takes 2 hours to convert for whatever they do on their end. It's a 2-hour long video, so it's pretty hefty. Okay, I'm going to first of all stop recording so we don't have all that junk. Thanks for watching it at home, by the way.